Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Meta's Twitter rival Threads crosses 100 million users in just 5 days, becomes the fastest growing social media app so far. This growth is without the app being available in European countries. EdTech startup FrontRow shuts its operations weeks after considering a potential sale. The company is also returning about $2.5 million to its investors, which include Lightspeed, 8Roads and Elevation, among others, as per reports. Dunzo delays June salary for staff. Sources tell CNBC-TV18 the deferment of salary is less than 50%. Company sources have denied reports of impending layoffs, saying no such talks have taken place within the company. IPO-bound fintech unicorn Navi FinServe is going to raise up to 500 crore rupees through the public issue of non-convertible debentures. The issue opens on Monday and the subscriptions will close on July 21st with an option for early closure, sources tell CNBC-TV18. Freakins, a homegrown denim fashion brand, raises $4 million in a seed round led by Matrix Partners India and Bloom Ventures. The D2C brand will use funds to expand its omni-channel presence and strengthen operations. Those are the headlines we've been tracking for you this evening. The Indian startup ecosystem reported the lowest 6-month funding in the last 4 years in H1 calendar year 2023 at $3.8 billion across 298 deals. This is a decline of nearly 36% as compared to H2 calendar year 2022, which was at $5.9 billion. Fintech, SaaS and D2C continue to be the most funded sectors in H1CY23 as per a PwC India report. To elaborate on the key findings of the Startup Perspectives report, joining me now is Amit Navkar, Partner Deals and India Startups Leader at PwC India. Amit, welcome to Startup Street. Your report says investment in Indian startups in H1 calendar year 2023 has been the lowest in the last 4 years. We all have discussed the funding winter at length, but Amit, tell us, when can we expect and what will take for the pace of investments to pick up?
Well, I hope that was an easy answer. But I think, what is impacting the overall environment today is the investor sentiment or the perception of an overheated market or say a valuation bubble or all the negative news that is coming out or even some of the high profile potential failures. All of this impacts investor confidence. And investors have been reluctant to back high burn businesses which are exposed to funding cycles. Now, because of all of this, I think people in the ecosystem recognize this. There are close to 2,000 startups which are institutionally funded in India. And there are a lot of investors which are backing it. So I think there's a concerted effort in the ecosystem.
Okay.
And the startup founders, true to their DNA, have adapted. And, if you talk to any major startup today, I think everybody explains or articulates, their paths to profitability within the next 12 months.
Yes.
Now, if that happens in the next 12 months, a bulk of our 500 plus large startups turn profitable, we are in for, like a bumper time ahead, because these are high growth digital businesses showing profits, then they're doing really well.
Okay.
So I think these are the broad parameters, and which is also fueled by, the stabilization of public markets. So I think that should give a lot of confidence. So your answer, the question is not an easy one, but I think in the next 1 or 2 quarters, we should see, some improvement.
Okay, all right. Bumper growth ahead in the next 12 months. That's what, Amit, you're hoping. But tell us, what are the top 5 sectors that have seen investor interest so far this year? Also, online gaming and food tech have seen investments increase by almost 3x and 4x respectively. So also talk to us about the key trends that you're seeing.
No, you're absolutely right. I think in food tech, there are 1 or 2 very interesting startups, especially in the cloud kitchen space, which are doing very well. And also in gaming. But if you look at gaming and food tech, they are not so large as a ratio of the total startup ecosystem in terms of the funding value. The top 5 ones, I think the first one would be SaaS. It has the most number of funded companies in India. And they have a global appeal because of their run rate business. They have the ability to turn profitable very quickly. Second one would be on fintech. You heard our PM Modi give us the challenge of the 20 days or the 3 weeks of without a wallet going out and just using your mobile phone for all financial transactions. So there is a rapid adoption of of technology, both in consumers as well as in businesses. So I think fintech continues to be attractive, and wealth tech and insurtech companies are particularly seeing an uptick and funding in this environment. The third one would be on the B2B e-commerce. I mean, in your show, you have spoken about so many,
Yes.
great opportunities and the large opportunities that B2B in India holds. So I think companies in that space.
Okay.
And the fourth one would be in the D2C. I think, like a company in the eyewear space and fresh meat segment secured some very significant 100 million plus funding rounds this year so far. So I think that opportunity continues.
Okay. Amit, during the last few quarters, despite challenging funding market conditions, and like you also mentioned, investors have shown strong support for their portfolios. They've doubled down on their investments in companies that demonstrate positive growth. But how do you view this trend? Is it just about having faith in portfolios or the lack of risk appetite in new investments?
See, when you look at early stage investors, they always have the option to write off investments, right? I mean, they have the option because they work on odds, some companies giving them the returns for the entire fund. But the market is not right for, a lot of startups to go out and secure funding at the right valuation. But there are these companies which are, showing some very good growth. So it makes absolute sense for the for the investors to back their own companies if they're not getting the right value in the market. Okay. And, there are instruments, if you were double click into these investments, these investments are made, which are unpriced. I mean, these are not valued, and these will be valued when the next round of funding happens. So that gives the opportunity for the investors to ride on the upside and also back companies as they move along.
Okay. While venture capital funding declined in the first half of this year, M&A transactions remained the same when compared to, H2 of calendar year 2022. 80 M&A deals involving startups were executed. Of these, 80% were domestic transactions and the rest were cross-border transactions. Will we see this trend continue, Amit?
Absolutely. In fact, I was expecting the count of M&A to actually increase, and it's only 80. So I think for the rest of the year, I would expect it to be much more. I think that's given, I mentioned to you earlier that close to 2,000 funded startups, not everybody is able to raise capital at this moment. Now, what would you do when you're not having access to capital, but you have got great tech, great people, a great business model going, but you just don't have the backing at the moment? It makes complete sense to merge with somebody else, merge with a larger startup or somebody from the traditional businesses, that which needs a digital edge. Okay. So I think that is bound to continue. Okay.
Also, Amit, similar to the VC funding activity, SaaS, fintech, e-commerce and D2C continue to witness the highest number of M&A transactions during first half of this year. Where do you see this year closing?
So that's a very difficult one. Like I said, forecasting the future in the current environment is very difficult. But I really believe that we are at our low, and it's only a way to go up from here.
Okay, one final question, and if you could quickly answer that, Bengaluru, NCR and Mumbai continue to be the key startup cities in India, representing around 83% of the total startup funding activity in first half of this year. However, what kind of a decline in funding activity did we see across all cities, and were there any outliers? If you could quickly tell us that.
Yeah, so I think that's a very interesting question. I want to talk about Hyderabad and Chennai. I think Chennai in particular have seen a lot of new startups come up, and that also shows the overall maturity of the startup ecosystem in India. Because earlier we used to see concentration around Bangalore, and then maybe Gurgaon, and then Mumbai. Okay. But you are seeing Chennai and Hyderabad come up in a in a pretty good way, and they should be making it to the top 3 in the coming years. But overall decline has been across the board, across the 3 major cities.
All right, Amit, we've completely run out of time, but many thanks for joining us and for taking us through the key highlights of the report.
Thank you. Thank you.
All right, Ritu, with that, it's over to you.
Well, the $12 billion fintech giant PhonePe is keeping One of the market leaders in digital payments. Fintech giant PhonePe is keeping really busy. Not only is it one of the market leaders in digital payments, it has now launched its own POS device code, which has now gone live in 10 cities. So lots to talk about. On the hot seat with me today, I have Sami Nigam, the co-founder and CEO at PhonePe. Sami, thank you for your time here on CNBC-TV18. Let me start with your latest venture, and that is the POS devices that you've just announced. Tell us what your plans are on that front. It puts you in direct competition with a competitor that, of course, you've been taking head on.
So I think we've been working in the SME segment for the last 6-7 years, and as the digital payments penetrations increase, we introduced smart speakers, we've introduced the PhonePe business app, so a lot of merchants are actually engaging with the payments data and they're seeing more volumes. As the market matures, these same merchants, some of them now want to have customers paying by card, some of them want to have customers paying by wallets. Then there's RuPay on UPI, all these different instruments coming in. So we see clear demand in the mid segment, in the belly of the market now. There's a very, very large belly, 4, 5, 6 million merchants who want POS devices. And we feel it makes sense for us strategically to actually enter the market now. So.
And you're planning to deploy 1.5 lakh machines by next year. That's the plan.
We set ourselves a target we know we can achieve, but we try and overachieve. We're now over 3 million smart speakers. We launched barely a year ago. I hope we'll sell a lot more than 1.5 lakh POS devices.
Well, we'll see how that plays out. But ever since your funding, you've been talking about focusing more and more on lending, and that's what I want to talk about. You spoke about POS devices for merchants. You've started a pilot on merchant digital lending. Have you already extended it to all your 35 million customers, or what's the plan?
No.
How's it playing out there?
With lending, we are segmenting the market. We are starting with the merchants where we have a lot more digital data history, more of a relationship with, because it makes our banking or NBFC partners more comfortable to actually have 6 months, 12 months trail of data.
Yeah.
So at this point, the reason we're calling it a pilot is we've not opened up the entire demand funnel.
Okay.
We've already reached about 1,000 crores a year annualized in lending in the first sort of 60 to 90 days. So there's obviously huge demand, there's huge supply, but I think we'll take another 6 months of testing, iteration, tightening up, nudges, reminders, alerts, collections, the whole 9 yards, and then we'll really open the floodgates.
So, what sort of a book are you looking to build? If you could give us a size, I know 1 year is too short a horizon, but what's your target here, really?
I mean, if I look at what Bajaj Finance has done over a couple of decades, right?
Yeah.
Consumer EMIs, the white goods, that side of it. I think there's a similar demand on the merchant side, on the SME businesses. There's staff for working capital loans. There's staff for flow-based lending. A lot of these merchants happen to be PhonePe consumers as well for a long time, so we have 2 data footprints.
Yeah.
I believe that we're talking in the tens of thousands of crores in the next 3 to 5 years.
And what about consumer lending? Will that also be tens of thousands of crores?
We hope to foray into consumer lending towards the end of this year.
And what are your plans there? Are you looking at tie-ups? Would there be co-lending? Or
we will not be doing any NBFC ourselves.
Yeah.
So it will definitely be lending by NBFCs and banks.
Okay.
Very clear. Our role is a platform play and a distribution play.
But you tried applying for an NBFC license last year, but of course Flipkart had applied along with you, so that didn't work out. What now? Are you looking to reapply for a license? Because
I don't think so.
You heard the regulator. It's just easier to operate when you're a regulated entity, when you're in the lending space.
So the period in which we applied, the regulator struck down the idea of co-lending or FLDG.
Yeah.
We will not enter a sector if there's regulatory risk at all. We always enter late if you see us.
What next then? Last time I think when you started your e-commerce business, for instance, which is quite the pivot, right? Was there some resistance? And
the pivot would be if I move from payments to e-commerce, if I open up hyperlocal commerce, and the idea is to connect offline businesses.
Yeah.
Remember, we do 1 billion transactions a month in just the offline merchant segment.
Yeah.
So there's a Pareto there, and these businesses are seeing a lot of digital payments coming in.
Yeah.
They're now seeing merchant lending from us, so they're seeing growth capital coming in. But they're also seeing the digital economy on the consumption side. And they're saying, hey, can you help us grow our business? It's a very fair expectation. If you see yourself as a partner in growth, you will want to enable that.
Yeah.
And I think the ONDC model works really well for us because we don't want to do conventional e-commerce where we're taking on logistics. That would be a pivot. Building supply chain would be a pivot. So I don't think we are trying to build the next Swiggy or Flipkart or Amazon.
You're just
We are just
providing
saying
the platform.
whoever's there,
Use the platform.
we will help drive the consumer demand to you.
So, I know it's early days yet. You just started in April. What kind of orders are you already taken? And you've already gone live in 10 cities. How many more, say, by the end of the year?
I think we end up at about 40 to 50 cities, and I base my answer not on the consumer demand that will play out, but more in terms of quality supply coming from the aggregators, what we call the seller platforms.
Okay.
So the 1 to 10 was about actually just making sure the ONDC protocols are working, customer orders are actually going through to the hygiene, roti, kapda or makan.
Yeah.
The 10 cities will now tell us whether the logistics will scale, whether the sellers will be able to scale, or rather the model scales in multiple cities simultaneously. It will tell us whether our product has product market match.
Since it's early days, let me ask you, what is your plan with PIN code? Because I know you said recently that PhonePe was, rather what PIN code is to PhonePe is what PhonePe was to Flipkart. Completely separate entities, completely separate teams, on different floors, etc. Are you going to hive it off into a separate subsidiary? Do you see it becoming as large a business as payments is for you?
I hope it can become as large a business, because I think millions of offline businesses and brands, both by the way, and separately, will want to connect with the customer directly, digitally.
Yeah.
And I fancy a chance at building a platform if it's on an interoperable stack or protocol. UPI's got its own stack, here's just a protocol, so it's a higher order of complexity, but it's a very large opportunity. So I think retail is a fantastic opportunity to get into as a platform. In terms of whether we'd hive it off or not, I think the answer is we'll have to look at it 3 to 5 years away later. I think the reason why PhonePe hived off from Flipkart is different than why a PIN code would hive off from a PhonePe. We had almost no overlap on the consumer or merchant base.
Yeah.
We are heavily regulated under a parent that is not regulated at all.
Yes.
Here the dynamics are opposite.
Yeah.
That burden's there already anyway.
Yeah.
So I think we can play together for a long time.
All right, with that, it's time for us to head into a short break. But coming up next, startups working towards a sustainable future are set to get a $10 million boost with the launch of a ReGreen Fund. We speak to the CEO to find out their investment strategy. Stay tuned. Welcome back to Startup Street. Revenue-based financing platform Recur Club has launched a sustainable finance program called ReGreen Fund to invest in startups actively working towards a greener and more sustainable future. The fund will have an initial commitment of $10 million and will provide selected companies with access to growth capital without equity dilution, enabling them to scale their operations, accelerate product development, and expand their market reach. Joining me now to talk about this fund is the co-founder and CEO of Recur Club, Eklavya Gupta. Eklavya, welcome back to Startup Street. Tell us about this ReGreen Fund. You have an initial commitment of $10 million. Are you looking at a larger corpus? And how will this fund be different from your previous funds where you have supported clean energy, waste management, and more?
No, absolutely. 10 million is just, scratching the surface. The Indian sustainable green financing market requires a lot of capital, right? Like with India's mission to get around $170 billion a year to achieve 45% reduction in emissions that the government has planned by 2030. We are just getting $44 billion a year. So annually, there is a gap of around $130 billion odd dollars. And, $10 million you can assume is just, the very, very start. Obviously, we also want to play it safe, understand the market in depth and slowly scale. But definitely, this is a start in the right direction where we believe for a sustainable Indian growth system.
Oh, okay. Eklavya, talk to us about the investment strategy. If you can give us a sense of what you will be looking for in these startups in the sustainability space.
Absolutely. I think some of the key sectors that we look for currently is, electric vehicles, both manufacturing of two-wheelers, three-wheelers, the demand is increasing significantly, as well as batteries, both charging stations, charging infrastructure, and battery swaps. These are two sectors that we have actually, also via the platform invested money. A couple of other interesting sectors are, biomass, biofuel supplies, as well as renewable energy in terms of, technology plays where people are trying to improve. For example, we have financed a company which is working on improving the air purification quality, in all commercials as well as residential buildings. So our focus would be to focus on key technologies and not the high capex focus industries because, that requires extremely large amount of capital. The technology play that enables the EV as well as the air purification and the renewable energy ecosystem. I think that is what the initial $10 million will be used for. And then slowly we will, obviously curate, strategies as we scale.
But have you already identified companies that you'd be investing in via the ReGreen Fund? Will some of these startups be from your existing portfolio of companies? And also if you could talk to us about the average ticket size of the investments.
No, absolutely. So currently we have financed around 10-15 odd companies in the sustainable financing space already by the platform. And they require constant capital, right? Like it is once you start growing, once you start scaling, you require more capital if it's purchase of, electric vehicles, batteries. So it's a capex heavy industry one needs to be conscious of. So some of them will be existing, some of them will be new. So it will be a mix of both to answer your question. We have already identified 4 companies where we will be allocating, part of this $10 million. An idea is to invest, close to around $500,000 to $1 million per company. So we can, give boost to early stage companies because we believe the bigger problem is, the inhibition of people to start companies in their direction because of high capex requirements. So I think we want to enable them to innovate and grow in this sector, such that India benefits.
Okay. All right. Also, like I mentioned earlier, the fund will provide access to capital without equity dilution. So would this be in the form of pure debt or convertible debt? And what is the size of the opportunity you see in debt funding for green startups? Basically, what is the current gap in debt funding for such green startups that you've identified?
No, absolutely. It will be, debt operating leases. So it will not be equity, as you rightly highlighted. And we will not do convertible debt because, as we believe at Recur, equity is the most precious asset that a startup founder could have. So we will want to, companies to keep them with them. So it will be purely in basis of debt and operating leases primarily. The tenures, the structures could vary depending on the quality of the companies, type of companies, but it will be typically 1 to 2.5 years kind of financing, $500,000 to $1 million each in the segment that I particularly mentioned, but it will be pure play in the form of cash flow financing and debt financing. And our forte of financing companies with predictable recurring revenues will be taken into account, while evaluating such companies.
Okay. Eklavya, you had previously said that Recur Club aims to be a full-service financial suite to recurring revenue companies by 2025. Are you on track to achieve this target?
Absolutely. I think the world has been kind. The macros have been kind to our business model as well. So we've seen a lot of demand increasing, obviously in sustainable financing and even otherwise for early stage startups, where we are building and focusing on providing a full financial suite to them, such that they can benefit, plan, because it's also about creating the efficient capital stack with the companies and making them understand what kind of capital is required for what kind of end use in their growth journey. So I think that is what we endeavor as always since the start, and we are well on track to on that regard.
All right. On that note, it's time for me to wrap up this conversation. Eklavya, many thanks for joining us on Startup Street, and wish you the very best with this ReGreen Fund.
Thank you. Nice speaking to you.
All right. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.